Okay, so right now let's talk about trade management because you can be the best trader in the world. Like you can have amazing entries, but if you don't know how to manage your trades, you're just going to continue taking loss after loss after loss after loss or getting tagged out and then the market moves in your direction and all of a sudden you are unprofitable because you can't actually have winning trades. So that is why trade management is so crucial when it comes into the overall execution. Execution is direction, and well, a trade is direction plus execution, but it's also the management. It's also the take profits. It's also the targets. So we are talking or already talked about targets, and right now we're talking about trade management because there's multiple ways in which I do trade management, and I want to mention all of them. So we have the a little bit more aggressive, we have the conservative, and we have the full blown out, like, oh my god, I want to squeeze the most amount out of the market possible. So we have three possible ways, and I will tell you all of them, and I will give you a lot of examples too. So first of all, it's the simple one. It's the the bit more aggressive or a bit more conservative, which is the 3 PD array rule or the 4 PD array rule. That simply means that you are going to see, okay, the market is right here. The market has just closed on the 15-minute, for example, or on the 5-minute. Let me count backwards how many PD arrays are protecting my trade from my stop loss. Because if all of a sudden you have 10 PD arrays protecting your stops, that means that the market shouldn't really be going to your stop loss. So you can push it up. Now, this is actually coming from someone this is actually a quote from someone that I learned from, which was ICT, and he said, after 3 PD arrays get disrespected, your ass is next. And it's a very good point because, again, if a fair value gap gets disrespected, an order block gets disrespected, and the next order block or fair value gap get disrespected, then the market isn't really moving in your direction anymore, is it? So if it isn't, then you want to get out. Managing a trade should be about when your trade no longer makes sense, right? So, for example, you enter in a long. That means that bullish PD arrays should be getting respected. So if all of a sudden bullish PD arrays are not getting respected, then that means the market isn't as bullish as you thought anymore. Therefore, you should just be out of the trade. And that's what the stop loss is there to do, is in order for you to reduce trades, reduce losses, or just fully take a -1. Do not take more than a -1, right? Now, one of the things that is important for everyone, and that is that my average loss over the last 6 months has been 0.7. That is very good because I've been able to reduce on average 30% my losses. And that is good, but it comes with a lot of experience of knowing when to manage and when not to manage. Because a lot of people, they're like, oh, the trade is moving, move to break even. Doesn't always make sense. It doesn't always make sense for you to move the trade to break even, because if you do, then all of a sudden you are cutting the market can easily go back to break even to your entry and then move in your direction. Yet you are already out, but the market is still moving in your direction because all of the PD arrays are still being respected. The order blocks, the bullish order blocks are still being respected. The bullish fair value gaps are still being respected, but you were spiked out, for example. And that's why I don't really care, and I will show you a couple of examples. For example, right here, my stop loss was still at a -0.3, right? But, well, here, maybe you weren't able to see that. My stop loss right here was still at -0.3. The trade was basically at take profit, and my stop loss was still at -0.3. While everyone would be like, "Oh no, I want to reduce my stops," and it's like, sure, and no, people will be like, oh, I want to break even. Sure, but why? Because the thing about this, what is the difference between a break even and a -0.1? Or a break even and even a -0.3? It's 0.3. So the only difference in your mind between a 0R, a break even, versus a -0.3 is your ego. You're like, no, I don't want to take this loss. No, I was almost in take profit. I don't even want to lose -0.1. But if the market tells you, or your management tells you the trade should go at -0.3 instead of 0, you should put the stop loss at -0.3. Does not matter if you then take a -0.3. It's the same thing. A loss And a reduced loss, a break even and a reduced loss, they're the exact same thing. And what I mean with that is that you're so attached to wanting to take a break even and to not lose that makes you lose long term, because you're getting tagged out and then the market moves in your direction, yet you're already out because, well, you wanted to reduce the risk as much as possible. Doesn't make sense. So that's why this comes into play. So you can go a little bit more aggressive, which is the 3 PD array rule, which is after 3 PD arrays, your ass is next. And that basically means that you go backwards and you're like, okay, let me count how many PD arrays. So we have 1, let's call it 2, and let's call it 3. So you put it below that, which I would put it here because you also have a tiny fair value gap right there. Right? So you have 1, 2, 3. Right? So in this case, your stop loss could be at break even. Right here, where would your stop loss be? You let me know, where would you put your stop loss? The trade is basically at take profit. And by the way, this is exactly when I close the trade. But it doesn't matter. Where do you think my stops were? Well, think about this. 1, 2, 3. My stop loss was up here, right? Above this fair value gap. You could have your stop loss above here, which is above the fair value gap. I just had it a little bit higher because of the 4 PD arrays protection, basically. But I will go back to that. So 1, 2, 3. Your stop loss goes up here, right? So that is on the 3 PD array rule. Once again, where would your stop loss be? Right here. Well, right here you would have 1, you have 2, and you have 3. So you put your stop loss up here. Yes, you're running profit. You are not moving to break even. And I think in this case, the trade had already moved 20 pips. Yet the market, yet we are still not managing at break even, because the market can still easily come all the way up and move lower, where you would be tagged out for break even. I'm still holding because I know that this order block is going to be respected. I know it's going to be respected. That's what my plan says. Next one, right here. Where do you think my stop loss is? Well, 1, 2, and then 3. So my stop loss is all the way up here still. So the trade is already running 1 hour. I'm still at -1. I don't care. Like, but because then between this high and here, it's basically nothing. Therefore, just keep it there. Because you need to understand, it's like changing between -0.8 and -1 is not going to make a difference. So I just keep it at -1, because there's the possibility that the market comes all the way up and for some strike of luck, the market still moves lower. That has happened to me before, right? Right here, where is my stop loss? So we have 1, 2, and then 3. But this is the lowest one, therefore my stop loss is at -1, right? So that is the 3 PD array rule. You simply go back to where price has currently closed, and then you count 3 PD arrays back. Those count as order blocks and fair value gaps within one time frame, which should be the 15-minute or the 5-minute. Depends. You look for those PD arrays at the entry time frame plus 1. So if you entered on the 1 minute, you look at the 5 minute. If you entered on the 5 minute, you look on the 15 minute. 15 minute, 1 hour, right? So that's basically how you would do that. Now, 4 PD array rule. Same thing, but it allows for quick wicks and quick price action. What I mean by that is that let's say that the market, before this candle, it comes all the way up here and spikes this and then moves lower, still respecting the fair value gaps. That would still be bearish. But if you would have had your stop loss up here, then you would have been tagged out. So the 4 PD array rule protections basically puts your stop loss 1 PD array above, which allows for the 3rd PD array to get wicked, right? So the fair value gap to get wicked, or the order block to get wicked, because we've seen that order blocks and fair value gaps, they only get disrespected once they close, once the candle closes above or below them, right? If the candle is wicked but still closes inside, that's not a disrespected PD array. So the 4 PD array rule allows for that to happen, basically. So right here, stop loss would still be at -1. Right here. So 1, 2, 3, and then you would count this fair value gap again, and you would put your stop loss at minus 0.5. Next one, right here, where would my stop loss be? Well, 1, 2, 3, 4, minus 1, right? You put it at minus 1. Then, by the way, this is actually the continuation of this trade, which is funny. I basically took profits right there. So you can see that the market started to break lower. Sorry, let's zoom in. The market started to break lower, and then I actually put my stop loss above here because of, even though it was running around 0.7, still I had risk. I really didn't care. So that is really that for the, I think this one is easy to understand. It's like count 3 PD arrays, one time frame above of where you entered, or count 4. It's as simple as that. Do not overcomplicate trade management. Seriously, the whole bootcamp, the idea of the bootcamp is everyone does not know how to teach because they overcomplicate things. Okay? And no one knows how to teach because they're like, oh no, and then you fucking look at this and then this and then this. And it's like, no, fucking make it simple. 3 PD arrays or 4 PD arrays. Now, last one, again, now I'm just going to talk against myself because I'm going to tell you keep it simple, yet I'm going to give you a possible aggressive risk management that is basically discretion based, but whatever. It's going to look a little bit complicated. So, okay, I might have talked against myself there, but aggressive risk management, similar to the other ones, but once the trade is close to take profit, you remove the take profit and you go to the 1 minute. So, this is where the trade was close to take profit, and basically right here, I removed the take profit, which was all the way down there, because there was a possibility that the market was going to go to 1 to 2, which was right here. So I removed the take profit, and as the market was moving lower, so remove the take profit right here, which was, by the way, down here, and then the market starts to break lower. I put my stop loss right here. I put my stop loss right here. Why? Because of the possibility that the market continues breaking lower, and if it does, I'm able to trail my stop loss extremely aggressively. So in this case, once you start doing that, once it's close to take profit, you go to the 1 minute and you do a 1 PD array rule, right? Once 1 PD array gets disrespected, you get out, basically. And the market completely reversed. You can see it right here. The market completely reversed. So the take profit, if I would have left my original take profit, would have been absolutely beautiful. The exit would have been beautiful. But because I actually did the aggressive management, which is good that I'm showing you one that didn't work out, I actually gave back 0.1. Sorry, 0.1? No, 10 pips? I don't remember anymore. But yeah, I gave back 0.13 R. So with that being said, that is the third one. So you just go into the lower time frame once you're close to take profit and you manage aggressively. So for example, if the market would have gone lower from here, I would have put my stop loss right there. And then as quick as possible, you want to put it at the original take profit, because like that, you didn't lose anything in trying to do this. So with that being said, that is it. That is the trade management. Keep it very simple. If you are confused about this one, just focus on this one, three or 4 PD arrays. And with that being said, I hope you enjoyed, and I will see you in the next one. That was a very heavy clap. I will see you in the next one. Peace. Hope you enjoyed this lesson. Click right here to watch the next one. And if you are struggling with overtrading, then click right here to check out Trade Blocker. Peace.